Good morning. I'm glad to be here this morning. I want to thank the AgriFin and World Bank team for arranging this, and I'm honored to begin your day. I hope to make it interesting. Well, I'm representing Equity Bank. As Michael has clearly said, I am the Deputy Head of Agriculture in Equity Bank, and I have been involved in creating the agri-lending sector in Equity Bank from scratch. As I had said yesterday, our initial start was on a wrong footing with the wrong people. We learned our lessons, and I'm sure now our house is in order and we can only grow. In brief, who is Equity Bank? Equity Bank was founded as a building society in October 1984 and converted to a commercial bank, which was duly registered on December 31st, year 2004, as Equity Bank Limited. It's a licensed bank under the Kenya Banking Act. Currently, we have subsidiaries in Kenya with 156 branches in Kenya. We have Uganda, 40 branches, South Sudan, 9 branches, Rwanda, 9 branches, and Tanzania, 6 branches. We also have an Equity Group Foundation that, besides agriculture, moves with 3 other pillars, that is environment, education, and health. We also have Equity Insurance Agency, which is part of the Equity Bank subsidiaries. Last evening, the last presenter said that corporate philosophies are important in an organization, especially towards agriculture. And I'll just talk about 3 of our philosophies that will make you understand why Equity Bank does what it does. And first is that our purpose is to transform lives and livelihoods of our people, socially and economically. When I say socially, I don't say it's CSR, it's free money, or that, but look at the base of the pyramid. What are the needs of those people? Much of what they are looking for is social needs, food, shelter, and clothing. Once you address that, once you upgrade their dignity, you move with them in trust. So we do that by offering them modern, inclusive financial services that maximize their opportunities. We are the biggest bank in terms of customer base. We have about 8.3 million customers, and we run on a model of low margins and high volumes. And for us to attract 8 million customers, it means there are some things we have done differently. And it also means that we need to be innovative enough to reach the 8.3 million because majority of these are in the rural areas. Our vision is to champion the socio-economic prosperity of the people of Africa. And our mission is to offer inclusive, customer-focused financial services that socially and economically empower the clients. So that is our network. Kenya has majority of the branches, as I have said. Why agriculture? It's not that Equity Bank does agriculture alone. We have other sectors within it, but why particularly agriculture? In the Kenyan space, agriculture constitutes a large underserved market. That is the base of the pyramid. And all statistics show Kenya is an agricultural country. 80% of the population is agricultural. 26% of the GDP in Kenya comes from agriculture. We do this also to promote economic empowerment by redistribution of wealth through access to financial resources and financial inclusion, to enable micro-enterprises to contribute to the economy and be part of the financial system. You realize the people at the base of the pyramid have been excluded from the financial system. It's also a social responsibility to avail financial services to the lower segment, majority of whom are rural community, and also women. What are the agriculture products for Equity Bank? We look at farm input loans. These are loans for certified seeds, fertilizers, chemicals, and the like for production. We look at microloans for working capital. We look at farm development loans. Look at anything developmental, maybe construction of farmhouses, construction of zero grazing units. We look at asset and equipment financing, tractors, modern infrastructure, drip irrigation, greenhouses, and the like. We also have irrigation infrastructure loans. With irrigation infrastructure loans, what I am looking at is we have some partnerships with KFW that helps in construction of irrigation infrastructure by cooperatives. So this is big corporate business for the cooperatives, but also looks at the lower end, who are the beneficiaries of the irrigation systems. Briefly on the Kenya agroecological zones, as I have said, the agriculture sector dominates the Kenya's economy. 15% of Kenya's total land area is sufficient, fertile and rainfall, and has rainfall to be farmed. The principal cash crops are tea, horticulture produce, and coffee. The main staples include maize, potatoes, wheat, and rice. Livestock predominates the semi-arid areas. In the Kenya's blueprint for the future economic growth, we call it Vision 2030, agriculture has been highlighted as a key driver for economic growth. That's why we are particularly interested in agriculture. So to the topic of the day, seasonal-based lending for farmers. When we look at market segmentation, agriculture financing in Equity Bank is through value chain approach. And it entails on focusing all the way from production, value addition, until the produce reaches the final consumer. Agriculture clients, therefore, to Equity Bank include farmers, what we call producers and producer groups, farm input suppliers, business development service providers, produce buyers, processors, and any other party involved in the chain. Again, into market segmentation, when we are looking at farmers, who do we classify as our customers? We look at small-scale but commercial farmers. I know the issues of land size come once and again, but in my years of experience, I realized that you may have a big land, but it's not productive. So we look at small-scale farmers, but who are commercial. We also look at large-scale farmers, and for you to qualify for a facility, an agriculture facility at Equity Bank, you must have proof of at least one successful season. On the small and medium agricultural enterprises, we look at least 1 year of operation. We look at proper business records. We look at valid licenses and operating permits. Before we lend to small-scale farmers, you realize that there are some farmers who individually cannot qualify for a facility at the bank. So we do something we call the group lending agriculture lending approach. And from the diagram, you can see most agriculture groups will come as an umbrella body, a cooperative, a community-based organization, a self-help group. And what we do is we segment them into small groups. And from these small groups of maybe 5, 10, 15 to 30 members, you are able to lend to them individually and use them as a social collateral. Why we adopt this group lending approach, especially for intake, is one, economies of scale, economies of scope, improved loan collection because it's a social collateral. If a member of the group does not pay the loan, the other members are obliged to pay for that member. It's cost effective. You're dealing with many people at one time. It has mitigated information asymmetry, reduced risks, and also the issue of a social collateral, as I have said. These people normally will not have anything to give as a collateral to the bank, yet they have viable agricultural projects. So we bring them into groups. We do 6 to 8 weeks training on them. So by the time you're getting to lend to them, they clearly understand. You also take them through financial literacy programs. What is our lending process like? It's just like any other lending process. We start with creating a credit opportunity. So what does this mean? We do the pre-application. That is the screening bit of the applicants to find out if they qualify for the loans or not. And we do the application for those who qualify. When it comes to the credit creation, we do a thorough appraisal and analysis of the clients. I will show you how. When it comes to the credit management, this is where we do the disbursements. Again, for agriculture facilities, it is a bit different from the normal lending facilities of the bank. This is also where we do the credit supervision. And for any securities that we have taken, this is also when we perfect them so that we can use them in case of defaults. On credit completion, this is loan clearance and also preparation for another credit opportunity. You realize with farmers, once you start a relationship, it's a continuous relationship. You just pick it from where you ended, and probably you grow the customers with time. So what are the key product features for the production loans? One is clearly the loan amounts. We go as low as the farmer request is, and we can go as high as their request is. The bottom line is the ability to repay that facility. Collateral requirements, we are very flexible on the collateral requirements. Majority of our small-scale farmers, we have to use flexible collateral, including household chattels and animals. Not so many will provide land as a collateral, but there's a segment where we have to get the land as collateral. Then on the loan term, we match the crop production cycle to the repayment of the loan. So if you have a 6-month loan, and if you have a 6-month crop, we make sure that your loan is either 6 or 7 months to cater for the marketing, and we cannot give you beyond that because, again, from experience and from how you get to learn the behavior of farmers is if you let them stay with credit for longer, chances of that credit being repaid back is 0. Then on charges, we charge credit life insurance on our loans. We charge a loan evaluation fee and also the agreed upon interest rate. Different products will have different interest rates. So what is our product development process like? For us, product development may involve either modification of an existing product or formulation of an entirely new product. At Equity Bank, we say we are market-led, innovative, and customer-focused. So most of the time, we listen to what the customers will say. We want this, you are not catering to this need, and we try to come up with a product. So what are the key questions we'll ask is, what do our target customers want? This is from discussion with our agriculture officers, from surveys, from customer feedback. Then we will ask ourselves, is the need within our mandate? Sometimes the regulator does not allow us to do certain things, but if it's something allowed by the regulator, we will go ahead. Then how do we meet this need? If it's from a product, if it's from a service, we go ahead and craft it. We tailor-make products to suit the customer's needs. So we start with ideas generation. This is what would come from the market response. On the day-to-day interactions with the customers, they'll say, we are getting into this line of business, we are getting into this crop, we cannot see a product that tends to us per se, but it's not to say that we have tomato loan, chicken loan, cow loan, all that. We will come up with a product that can fit majority of the characteristics of what the farmers are looking for. Then, we will listen to the customer's feedback. Most of the branches will have a suggestion box where customers will write something and put their feedback on. We will use the agriculture staff. We have over 300 agriculture staff. So we use the feedback. They interact with the customers a lot. They get the feel of what the customers need. And we also have a research unit for the bank that conducts surveys on behalf of the bank. So most of the time, we're also trying to attend to what the surveys require of the bank. After that, we do the features development. We try and design a product. We try and create an eligibility criteria. We will price it according to the bank. We will look for how to promote it. Most of the time, the promotion is just internal. As you have seen, we have a wide branch network. Then we look at the place. Sometimes it will be a region that is in need of that product. So we'll either pilot with that region before we push it to the rest of the bank. We look at the people, the process, and also the MIS reporting. For us, what gets into the system is very important, especially when it comes to agriculture, because we want to find out at the end of the day, are we making value to the bank? On product testing, if it's a new product, we will pilot it. In a few branches, learn lessons. If it's good enough to be taken to the entire bank, we'll do that. Then if it's an existing product, we'll do an evaluation after an agreed period of time. Maybe we say 1 year, let's see how this season goes, then we do an evaluation of it. On loan administration, loan application, we encourage that The customers do this application at least 1 month before the onset of the rains. As you know, agriculture most of the time will rely on seasons. In Kenya, there is this mindset that the long rains will always fall on the 15th of March. So you find that the banking halls are full in March. From 1st March, everybody's coming to the bank. Of course, you have those who come even on 15th March, but we try and encourage that they come at least 1 month before that to enable the officers to do a thorough appraisal. I'm not saying 100% will do it that way, but at least if you're able to handle like 70% before the onset of the rains, you're able to handle the others who come late. Timing being very sensitive. The reason why we give at least a month, because if everybody comes in when the rains are here, what does that mean to the production? If they plant late, it means the crop will mature late. It also means that probably at the time you expect your loan repaid, you'll not have a crop to repay your loan. On appraisal, we ensure farm visits are conducted. Our agriculture officers on the ground have to do an agriculture appraisal. If it's a farm input loan, we get the farm input requirement summary from either an agro dealer or from whoever is providing the farm inputs in form of a pro forma invoice. Then we apply Campari. That is, we look at the customer's character, we look at the ability to pay the loan, we look at the margins of this loan, we look at the purpose. It's very important. Purpose of the loan, you want to know if I give you money for seed, do you buy seed or do you take your kids to school? We look at the amounts. Amounts are also very important. You do not want to lend too much or too little to a project. You look at the repayment, and as I said, we try to match the repayment to the crop cycle. We also look at the insurance. What is our fallback position? We do this test on the proposal and on the client, and if they pass that test, it means you have a good appraisal. We will also apply the 5 C's of lending together with Campari, and as we have all said, you use the qualitative and the quantitative analysis of a farmer to make an informed decision. On disbursement and post-disbursement, we do it in tranches. If it's a production loan, you release money for planting, you go back and do a post-disbursement evaluation. If it satisfies you, you release money for the next stage. If it's money for an equipment, for example, you are sure you are sending that money directly to the input supplier or the equipment supplier. If it is money for a social need, let's say medical fee or school fees, you make sure you're paying directly to the person in need of this money. If it's a school, you do a check. If it's a hospital, you pay money directly to that institution. So when I talk of the application form, what is it that we are looking at? We'll be looking at client personal information. We'll be looking at client farming particulars. We look at the loan particulars. What is it that you're applying? What is your contribution? What is the cost of the project? We look at the credit history. Have you borrowed other loans with us or with other financial institutions, and how did they perform? We look at the financial details. This is in whatever manner they come. We have trained our officers to try and make out from the farmers, because you realize it's a big challenge sometimes to get records from these farmers. So during the analysis, you try to sit down with them and make some financial details out of it. We look at the production data, and in our case, we look at the past and the projected. When we go for the client visit, what is it that we are looking for? Description of farm location. We look at the farming particulars in actual, not what the customer said in the bank. When they say they have dairy animals, how many are they? What type are they? What is their production like? We look at other sources of income. You realize a lot of small-scale farmers will not tell you entirely what they are doing. They'll only tell you, I need money for this crop that I'm planting. Yet when you conduct the visit, you realize they have so many other sources of income. And in our case, we do a household appraisal. So you look at other sources of income, you comment on farm management, which is very important. You may have a very good-looking customer at the banking hall, but when you go home to find how is their farm being managed, you realize it's a totally different thing. You comment on the pledged securities, you do a SWOT analysis, then the officer makes their recommendation, and they draw a sketch map. So this is what our loan application would look like. It may not be very clear from here, but it's on It's on the presentation. This is the farm input requirements, the post-disbursement evaluation form. Where we use agriculture group lending, we use passbooks, and that is what they would look like. In terms of risk management, the risks have been repeated over and over. I think agriculture, generally, we talk of the same concepts throughout the world, but I think it's our landscapes that are different. We talk of production or yield risk, we talk of market or price risk, the financial risk, the personnel risk, the moral hazard. How we try to mitigate this, we are trying to do index insurance, though on pilot, diversification, use of certified seeds. On market, we are trying to do warehouse receipt financing. On financial risk, we are partnering with some organizations that are doing credit guarantee schemes. On personnel risk, as I had said, we do credit life insurance. On moral hazard, we do financial literacy and also group lending. So what are some of the challenges? Crop failure because of relying on weather. Funds diversion. It never misses much as you want to put all the controls. Last minute dash for farmers. It sometimes compromises the officers to do a lot of applications at the same time. Side selling on contracted produce. Overproduction leading to low pricing. Political interference. Much as you don't work with input suppliers, you always find some who are not very professional, lack of extension, lack of financial literacy. But how do we approach this? How do we mitigate this? As I said, we do household appraisal. We do the group lending approach. Loan terms and conditions are adjusted to accommodate the irregular cash flows. We try as much as possible to do contractual agreements to reduce price risk, to enhance production quality, and also guarantee payments. Collaboration with stakeholders through partnership in the value chain financing. We try as much as possible to insulate agriculture finance from external interference. Even where the government is involved, we will tell them to allow us to do our work as the bank. They are just there either to promote or do extension. We encourage savings, even in modest amounts, through the agency banking and mobile banking, financing through the value chain, financial literacy, proper IMIS reporting so that we are able to classify risk. Also, we try to do financing agriculture innovatively. We are one of the banks in Kenya that have really been assisted by the agency banking, especially in collection of loans and also in sourcing. We are doing a pilot of how we can source, but it does not work for all agricultural loans. These are some of the illustrations when we talk of post-disbursement and client visits. Those are some of our staff. That's a rice field, that's a cotton field, that's a maize field, that's a harvesting time. Financial literacy, this is what I'm talking about. They are taken through 2 weeks and graduate. Outreach through agricultural shows and also giving incentive to farmers. Linkage to market. Agency banking is something like that, using the local shopkeeper, the local butchery to extend financial services. And that comes to the end of my presentation. Thank you very much.